A sum of several $100 million is up for grabs. We need to skip the little talk and get to the meat of this very important film. Investors have been through a tumultuous ride of emotions in the cryptocurrency market over the past few weeks. Many were left bewildered when, just when it seemed like the market was on the mend, another crash rocked the scene. As prices fell again yesterday, it sent shockwaves through the cryptocurrency community. But what's been propelling this crazy ride? If you recall, 2 months ago, the first cryptocurrency ETF, Bitcoin, was approved, allowing investors to pour hundreds of millions of dollars into the cryptocurrency market. The daily influx of capital caused a frenzy, driving prices to record highs. It must be emphasized that Bitcoin specifically saw an astronomical surge that surpassed the given Bitcoin's status as a leading cryptocurrency. The market run has had a profound impact on other assets in the industry. We have witnessed firsthand how Shiba Inu has been riding the wave of success that has accompanied Bitcoin, the undisputed leader in the cryptocurrency industry. The function that Bitcoin plays is too essential to lost in the midst of Shiba Inu's recent meteoric climb, a gain of over 200% in a single week that demonstrates the interconnectedness of the cryptocurrency market and the impact of Bitcoin's developments on its peers. However, this begs the excellent question: what transpired in the past day to send the prices of all cryptocurrencies down again? It seemed like the Bitcoin market was finally catching its breath after investors endured the frustration of regular falls. The appearance of recovery signals generated hope, but unfortunately this optimism was short-lived. As soon as the market showed signs of stabilization, the previous day's record-breaking $154 million withdrawal from the Bitcoin ETF sent prices tumbling again. This massive exodus from ETFs started a domino effect that led to a precipitous decline in Bitcoin prices. Once again, prices collapsed, and the entire crypto space felt the impact. Bear in mind that this is far from an unprecedented occurrence. On March 1st, something analogous occurred, though it was less significant. The impact on Bitcoin's price trend was magnified by yesterday's withdrawal, which was significantly larger than previous events. But how much longer can we expect the Bitcoin market to continue its downward spiral? For what reason, then, did investment in Bitcoin ETFs abruptly halt? Do you think Bitcoin has reached its final chapter, or is there more to come? We'll have to see. Bitcoin is poised to enter what one Twitter user accurately described as the danger zone. The tweet, which was laden with statistics, painted a gloomy picture of previous market retracements and potential downturns just before it was disabled. It predicted that Bitcoin will officially enter the danger zone at some point. The orange dots mark the start and finish of Bitcoin's praying. It retraces historical trajectory. 14 days before the hail in 2020, this retracement began at a depth of 20%. Although it was brief, Bitcoin underwent a reaccumulation period of more than 150 days prior to its breakout. In 2016, there was a meteoric rise. It began 28 days prior to the hailing and reached a depth of -40%. It continued for a total of 8 weeks until Bitcoin began a meteoric rise. Bitcoin has fallen 11% just previous week, putting it 29 days before the hailing. Similar to trends observed before the prior halving events, this worrisome forecast implies that Bitcoin might soon experience a substantial decline. The data is quite bleak, suggesting possible market retracements and extended periods of volatility. You might be thinking, well, that makes sense given that many are selling their Bitcoin holdings in anticipation of a further decline in the market price. That being said, it's not a picnic. Absolutely not. Regardless of whether investors should sell their cryptocurrency holdings to benefit from anticipated price falls and then buy them again at a lower price. A perplexing paradox has emerged in the recent market behavior. Instead of more assets flowing into exchanges, more assets are leaving. There should be a dramatic increase in the amount of cryptocurrencies coming into exchanges as people try to sell their holdings in the hopes that prices would fall. But the truth is very different, with huge withdrawals from cryptocurrency assets. This perplexing pattern challenges the accepted thinking that one should sell high and purchase low. Yesterday, an unknown entity withdrew more than 5,100 million Shiba Inu tokens from Coinbase, demonstrating that something is seriously wrong with the current situation. Exchanges are reluctant to part with their assets, and some Shiba Inu whales are acting similarly bewildering. A tweet that sheds light on an intriguing phenomenon: the Continuous flow of Bitcoin from holders who possess 0 to 10 Bitcoin to presently holding 10 to 100 Bitcoin may provide an explanation for this seemingly contradictory market behavior. Give some whales a new strategy to follow as they continue to amass Bitcoin holdings despite the present market slump. Curiously, some whales aren't giving in to panic selling and are instead amassing bigger holding bags, which goes against the grain of conventional wisdom. Instead, they're doubling down on their investments and steadily extending their positions. A deeper dive uncovers the logic behind this unconventional approach despite the market's turbulence. These whales are preparing for potential future gains by accumulating wealth while assets are cheap. The precedence that Bitcoin follows is known to them. These large investors aren't deterred by small-term swings in the market because they're playing the long game and hoping for a possible market frenzy. The cyclical nature of the cryptocurrency industry is being exploited by them, getting ready for the next surge that usually follows consolidation and retracement phases during periods of historically high cryptocurrency prices. Retail investors may be swayed by short-term market sentiment and fluctuations, while institutional players in the cryptocurrency industry have proven their expertise and foresight by steadily amassing assets. Market volatility might make regular investors nervous, but big players often have a better perspective. This goes to show that certain whales have a better grasp of market dynamics and know how to position themselves for the long haul and a strategy for overcoming obstacles. But now we'll get back to Shiba Inu. A lot of people have been asking what will happen to the price of Shiba Inu after Bitcoin because of the recent market instability. The response might catch you off guard. Leading on chain, metrics and price prediction firm CoinCodex has presented a quite bullish forecast for Shiba Inu, predicting that it might experience a 225% increase in value following the Bitcoin market. In light of this prediction, it appears that Shiba Inu could achieve even greater success than before. For investors who have stuck with Shiba Inu and remained loyal to the cause during this long period of turbulence and stagnation, breaking the 49 level could be a source of joy. It is important to proceed with caution when making predictions like this, even while it is encouraging that the Shiba Inu may finally surpass its all-time high after more than 2.5 years of trying. Though they may inspire optimism and trust among investors, positive estimates should be seen as possibilities rather than assurances. The cryptocurrency market is notoriously unpredictable due to factors such as general economic sentiment, changes in legislation, and market attitude. Is the Shiba Inu post having performance projection something you can get behind? It gives investors who have been bullish on the token some hope for the future, but do you think it will be enough? Please leave a comment. All of these trends have the potential to influence shifts in selling prices. The film concludes with this scene. If you're interested in watching more, just click on one of the videos. It would be my pleasure to hear what you have to say. If you enjoyed the video, please hit the like button and drop a comment to help me out with YouTube's algorithm. Sharing this article with as many people as possible is another great way to help get the word out.